Is ready? Let's see here.
I'm assuming you got the same email from Grace.
All right. We are live. I don't know what email you're talking about, Jacob. Anyway, we are live, and Michael Lee here with Reconcile, Jacob Schroeder with Ascend Consulting, and Dan Luthi with Ignite Spot. We're here to talk about the IRS final release guidance related to deferring your employer tax payments, and how to do that, as well as the impact it may or will have on PPP loans and et cetera, et cetera. So why don't we start out with the IRS guidance and what you need to do if you're a small business owner or an accountant and you want to have your payroll tax, your employer payroll tax deferred payment for later, and what that looks like. So when we start out with that. So from my understanding, and Jacob and Dan, you could jump in and correct me. From my understanding, based on the IRS's new guidance on deferrals, is that you can start deferring employer tax payments, not employee tax withholdings. This is employer tax payments only. And this you would do this either through your payroll provider. You get your payroll provider to either do the deferral for you, or you get your payroll provider to agree to stop drafting, escrowing your employer tax, which they almost all do. So you have to get them to agree to that, which I think that whole thing is another situation because of, obviously the assumption is the payroll regulators are okay with them doing that on their liability because it's a liability issue. So you have to get them to not take or withdraw your employer tax.
And Michael, real quick, I want to make a clarification here. It is only employer Social Security.
Yes.
So it is not Medicare.
Federal.
Yes, it's only
federal.
the employer portion of Social Security. So many times when we talk about FICA, we talk about Social Security and Medicare. This is only Social Security.
It's not the Medicare side of the employer tax. And this is the Social Security part of the employer tax.
Yes.
And this is not your state employer. Your state may have a stimulus or some kind of deferral, but we're not talking about that.
Right.
IRS is not dealing with state by state issues. They are dealing with the federal Social Security match and not the Medicare match. Okay, so,
Correct.
So if you want to do
first, I got to ask a question first, though.
Yeah.
Michael, you're a huge PEO fan.
Yes.
So you are all about, let's have it someone else manage, maintain, work through all of that.
Yes.
Jacob and I are both huge tax impounding fans.
Yes.
From payroll provider pieces. So all of us right now are looking to our providers for help to take care of this for us versus a solution of we don't deal with impounding. We pay taxes when they're due, where this would be majorly beneficial if we were going that route. Correct. So our perspectives right now is probably going to come from
it's much simpler.
Things.
It's much simpler if you're paying your own tax because you can just short pay that amount, right?
Right.
In impounding and PEO, it becomes a lot more complex.
Right.
In this.
Okay, cool.
Right.
Thank you. Sorry for that. Sorry, interruptions. I want to make sure we're on the same.
Before we dive deeper, I want to make a little clarification. Many times before we said if you were getting the PPP loan, you could not do this. However, the IRS issued guidance on Friday that you can do this in conjunction with a PPP loan. So you can get your PPP loan and you can be deferring your employer portion of Social Security tax right now. You do have to stop deferring your employer taxes when you get your loan forgiven from a PPP perspective. So if you get forgiveness on your PPP loan, the date you get forgiven, you have to stop deferring out your employer Social Security and Medicare pieces. But you can do it during this time, which actually makes a lot of sense. PPP loan is covering all the rest of your costs. You can defer out the employer piece. So now the only thing you're responsible for in doing this is Medicare and federal unemployment insurance. That's the only thing you truly have to pay out of your pocket to be running payroll once you have your PPP loan funded and you're using payroll tax deferral.
Okay, so let's do a quick example. Okay, let's do a quick example. So let's assume that on a monthly basis, that let's say a business their Social Security match total for the payroll they have in a month. Let's say it's $1,000. Okay, for the month of April. For the month of April, it's going to be $1,000.
Yep.
So I mean, I can't do in the back of my head what that is in a total payroll perspective, but let's say it's $1,000. What we're saying is
It's $16,000 a month in payroll.
okay, $16,000 a month of payroll. Okay, good. See, Jacob, the human math guy in his brain. So $1,000. If you would pay $1,000 a month towards employer Social Security match, not the Medicare part, not state part, not unemployment, not FUTA unemployment. We're talking about the Social Security. If you pay $1,000 a month, you can delay $1,000. And the delay works this way. You delay the payment and you can pay it back in 2 payments. The first payment will be due 50% at the end of this year. The second payment will be due at the end of next year. Is that right?
The first payment is at the end of 2021.
Okay, first payment is at the end of 2021.
Second payment's end of 2022.
Okay, so great. So you basically have you have about a year and a half from now, you have to start your first payment and then the remaining payments at the end. But just to be clear, this is not a forgiveness of Social Security match. This is a deferment. So this is a deferment, and anybody can request this deferment. But again, you're going to have to work with your payroll provider in order to make it happen. Because if your payroll provider impounds your payroll tax, they're going to probably make you sign something or require you to click a button on their website in order to turn off or turn on that impound. That's automatic right now, correct?
Correct.
Yeah.
And I'm going to say too, if you do not get a PPP loan, you can continue deferring this tax for the rest of this year. This program runs through 12/31/2020. So for the whole rest of this year, you can defer that tax out and you don't have to pay it at all, which gives you a lot more operating cash during this time. If you have a PPP loan, you can only do it up until the time your loan's forgiven for the rest of your payroll side, which will be sometime in that July, August timeframe.
Okay. So the warning for people, again, what we're talking about is the IRS provided guidance regarding employers being able to defer payment of their Social Security employer match on payroll. Now, the warning, the big warning, we want to make sure everybody knows, accountants and business owners, is this is a deferment. So you still owe money. There will still be something on your balance sheet, or should be, that says you owe money to the IRS. And you need to know that you will be in business and that you will have the cash to be able to pay this off. Because one of the few taxes that is ever forgiven by courts and by the government is payroll taxes.
Yeah.
They want their payroll taxes.
Well, and this is really, there's a lot of legal sides to it because you are just a trustee of this money. So it's a breach of a trustee duty, which becomes much greater than you just not paying your own income tax from a legal liability standpoint. So no, and this is why Dan and I are huge fans of impounding, because we don't want business owners to hold this liability, right? So in this process, we're bringing that liability right back onto the business owners, and they need to understand that it's a liability, and they cannot spend this money. Well, they can spend it now, and the goal in this program is to free that cash up now, but you are going to have to pay this one. This bill, when it comes due, will be the highest priority bill you have, without a doubt, when it comes due.
Yeah, and my recommendation to accounting professionals and bookkeeping professionals is, if you are actually doing the payments on behalf of your customers through EFTPS manually, okay, and you're not using a payroll provider, or if you're using a self-pay payroll system, right? Like any of the payroll systems that are cheap, there's a piece of software, but you can choose when to pay. My recommendation would be to have your client sign the largest disclosure with your firm, because the last thing you want your client to tell the IRS is that your client didn't give you permission to do the withholding on paper, even though you know they did. Okay. So if you start doing this wide swath across your customers and you start withholding the employer match on Social Security and they come back to bite you because they don't make their payment end of next year, and maybe they're not a customer of yours anymore by the end of next year, maybe they're out of business by the end of next year, and the IRS comes after them, you don't want them pointing their fingers at you as the accounting professional who handled their payroll tax payments. So you want to make sure that that agreement that you have on providing payroll services has an extra document signed that clearly lines out the responsibility of your firm and the responsibility of ultimately that small business owner who will have to pay the IRS this, regardless if they're a customer of yours or not at the time when it comes due. I'm hoping people kind of think through that before they jump into this, because I could see the IRS scaringly going after accounting and bookkeeping professionals who either forget to or do this without the small business owner's complete consent and disclosure in order to save the cash of the small business owner.
I think the same thing comes into place too, though, in, if you're a payroll partner, or you're an accountant working with a client who uses a payroll partner, such as Gusto or anybody else from that standpoint, that will allow for us to, for these things to take place, that there's communication regarding that too, because you don't want there to be potentiality within your engagement or within your agreement that says, well, we turned it on in Gusto for you because you said we could. And now we're on the hook for that process. So I think this becomes one of those areas that becomes really important to make sure that you're communicating that that it's the client who is acknowledging these things. If you're utilizing a payroll provider that allows for this to happen and they're tracking it through that process, I think as a client, you also have to determine, what's my plan and strategy over the next 2 years? Because you shouldn't be wanting to think about transitioning payroll providers at this point in time, because this is only going to add more complication to how you track those things and how you transfer information from one system to another. You should be thinking more about, how do I make sure that we cover these positions going through this process as well? How do I make sure I understand my liability? How do I know I make sure I understand my risk to what's going on through this process, to make sure that we're better protected in what's going on? Because I think that becomes a major concern as we move down this road on what we have to do to better protect ourselves. So one of the questions that just popped up in the chat, which I think is actually a very important question, which is, have any of you added language to your engagement that associates with this? The claimants having, some sort of separate documentation regarding us agreeing to it. For us as in the company, we haven't added language yet into our agreement, but if we have clients who are interested in doing it, they're the ones that have to be the signator on any legal document that transpires or takes place with payroll. So I cannot, as a payroll admin or anything from that standpoint, sign any of those documentations approving or associating that with us. The client is fully responsible for their payroll liability at that point in time, and any decisions they decide to do with their payroll. So we haven't put that in place yet, but it may be something we add some context in a little bit later.
Yeah, I think we're going to have to add context on it. And granted, this came out Friday.
Yeah.
So today's really the first day that I'm diving into this.
Good Friday, right?
Yeah, right. And I say we're going to have to, because I don't know. Like, I went through a payroll partner's platform today to do it, and it's simply checking a box. So they're not signing anything truly legally. They're just literally checking a box to opt in and saying, yes, I agree to this. So I think that clarity around who checked that box, or that you at least have permission, even if they went in and checked it, you don't want them to come back and say, oh, I only did that because you told me to. So I think a document that clearly says that they understand the implications of it and that they're okay with it, or they relieve you of any implications resulting from it, right? Is probably an important one there that we all need to add in for this program.
Do you feel like that should be on the payroll provider who's requesting that signed authentication from the guarantor? Or do you feel that should come from the accountant or service provider? Because my thought is, if it's associated with taxes, if it's associated with the liability, that the payroll provider should be guaranteeing that the the business
Right.
owner knows the risk that
Has
they're
checked
taking by
the
agreeing
box.
to it. It's not just a checkbox, because I mean, I can check what shirt size I have in half the payroll companies that we have out there. That's not the same as agreeing to mitigating or deferring taxes.
I would agree with you on that. That one should take a firm signature from the owner of the company. Like, I would think if we think through some of the onboarding processes, right, of clients and many payroll softwares, as admins, we can go do a lot of things, but that last box has to be signed by the business owner, right? And having this one, we could even tee it up where it prompts the business owner to come in and sign, would be perfect. Now, I do think some of the other systems that maybe aren't as sophisticated as those ones, it's probably going to fall to us to have that process done. I really think this is going to fall to accounting firms in the systems where the accountant schedules the payment themselves. It's not impounded, it's not auto done. That an accountant is truly going in there and saying, pay this bill, and it's getting short paid. And I think accountants who do that need a lot of documentation around this to ensure, you know, the legality of it and make sure that they're protected from an insurance perspective.
Yeah, I would for this, you know, you as a firm owner, if you're an accounting firm owner, I would, regardless if you use a payroll provider or not, a partner, you know, I would make it really clear to your staff, especially the ones who actually process the payrolls, if they're using a, you know, an online payroll provider like Gusto, ADP, Paychex, or whoever, if they're the ones actually processing the payroll online, right, with the approval of your, you know, with the approval of the client, if they're processing it, I think you need to make it really clear to your whole staff to notify upwards that there's going to be a disclosure that will be signed from with your firm that absolves your firm of any and all future liabilities or harms or penalties or interest that may be given to your client if they don't pay this liability in the future on time.
Right.
And that you cannot be marked, you got to be held harmless of any exposure related to that. Because I could see a client, you know, with even a dozen employees, I could see an employee going, oh, okay, the client asked me to defer. I clicked the button in Gusto, voila. I clicked the button in Paychex, voila. And not knowing that they've just put liability on their own firm accidentally
And
by default. And then, you know, maybe they're not with the firm next year.
yeah,
Maybe by the time the client has to pay and the client's not with the firm anymore, and then the client points their fingers to, oh, that was my previous accounting firm. They turned this on. I didn't know about that. I didn't, you know, I don't have any, I didn't send an email. I could see it being done over the phone. I really need this deferred today, right now, immediately, because I have the cash.
I mean,
I also think
saw
on
an
the same
accountant
space.
today.
I saw also in the same space of a client, an accountant, doing it preemptively for the client, saying, hey, we know you're in a cash crunch right now.
Right.
Let's do this. And the client's just like, yeah, I don't have money. Cool. You know, they're not thinking about implications.
No.
Right.
And if someone does it without truly thinking about impact of what's going on, or having that, like, Jacob, you understand what this means by us deferring this for the next 6 months. You owe this money. Here's the 2 dates. Here's the amount. Like, confirming, communicating, setting the expectation. Because if not, it's just, oh, cool. Yeah, less bills right now. Cool. This is going to be great. Let's keep doing it. Keep doing it. Keeps the door open another week, you know, while we wait for our PPP.
To the individuals that are listening to this, I'm going to say, we're making a huge deal out of this, and you need to take it seriously, right? Like, we're saying this is a big deal from an accounting firm perspective because there's a huge pitfall here, and there's a huge risk to you as a business owner in doing this. And we're saying protect our accounting firms, but you also need to really understand those implications if you're going to go down this route, because it's big to you, and it can be a real problem down the road. You know, I had an accountant reach out today, and they said, oh yeah, is this active? Because my client needs to defer $15,000 in Social Security tax today. Like, we need to opt this in so they don't have to pay that $15,000, which means they have a really high payroll, right? But those are big dollars. If you don't pay, you know, even if it's bi-weekly and you don't pay for the rest of the year,
right? That's a lot of money.
$15,000 to pay. Even 50% of that comes due 12/31 the next year is really, really big. I mean, that can bankrupt your business very easily.
Right.
So really pay attention to this and really understand what you're doing in checking that box, and creating a plan. Like, when am I going to start putting money back so I can pay for this? Because if it's due 12/31/2021, many of us say, well, that's a long time from now. But if you're going to do this, have a game plan of when you think you're going to be able to start saving that money back up so you can drop that payment when it's due.
Yeah. And this is not something that I'm going to be recommending to my clients. I probably won't even be mentioning it to my clients to do, mainly because there are a lot of other expenses and bills they can defer that have a lot less legal ramifications for us as a firm and for themselves, right? And that they can negotiate. The one group that is very hard to negotiate with, that you try not to defer anything with, is the IRS. Right. And they generally will find a way to come back, whether now or in the future, to either the business or to you personally as the business owner, or to the accounting firm they believe was held responsible for the service. So, this is something I will have a lot of precautions around, and want to make sure that, you dot your I's and cross your T's on audit trail, on disclosure, on holding harmless, because it does have huge ramifications if it's a lot of payroll. And like Jacob said, can add up to a lot of liability. Now, I think we covered a little bit that the PPP loan impact. You can do this deferral until you get your PPP loan, and then you have to stop. And that's another
so
thing.
Loan forgiveness.
Loan forgiveness. Okay.
So
loan forgiveness.
Like, good news, my loan was funded today. Many of my clients were funded on Friday. So
yeah,
we have loan fundings from PPP. But just because I got that doesn't mean I can still do this program.
Okay.
Up until July or August, when the calculation's done for forgiveness. And when that calculation's done and the SBA issues the forgiveness, you have to stop deferring at that point.
Okay.
But granted, your payment still doesn't have to happen. But your deferral gets cut short compared to those that can run deferral through December 31st, 2020.
Yeah. So, I mean, that's a good note, is you're gonna have to remember that, because
right.
The world, time is, a day feels like a week right now. A week feels like a month. So you're going to have clients who might get the PPP funding and completely forget to tell you, or they get the forgiveness and they completely
right.
forget to tell you when they got forgiveness.
And your payroll provider, your payroll provider is not going to know that. Even one, I went through the opt-in process today, one-to-one, just to see what it was like, right? Like, what's the process like for a client? And they specifically state in there, when you get forgiven, you're going to have to come back and tell us, because we will not know it, right? And we will keep deferring, which will result in penalties to you, and interest and failure to pay penalties. So make sure you come back to us and tell us what that looks like.
Yeah. I think the thought that comes to my mind with this is we've talked heavily over the last couple of weeks about making sure we're planning accounts payable, understanding our expenses, cash outflow, everything like that. This is still an avenue that's not a bad option for some organizations.
Correct.
I think all of us agree, we're very timid about allowing clients or suggesting something like this due to the magnitude of what it can happen from a problem creation standpoint. If you're using a third-party payroll provider, it's really easy to let it continue on even after that forgiveness has happened if you receive the PPP. So there's potential implications that go along with that. Pushing out payroll tax for 2 years, potential implications that go along with that. And so as a resource, it's not a bad resource if it's managed correctly. Right. If it's not managed correctly, there's a lot of nuances that you really need to be aware of to understand the implications that can go on for you as an individual through that process. And so I think it's just one of those things, be very careful in the usage of it. Fully understand how you have to recoup or capture or take care of it to make sure that things are planned correctly, whether it's building out a schedule on how you're going to put money aside or back into it between now and the end of 2021 when the first payment's due, and then 2022 and the second payment's due. Great. Whatever it is, build that around it. As accountants, definitely communicate to your clients fully the implications that go along with it, and make sure you're covered through that process too, so that there's not potential risk that comes back to you on a decision that you had no involvement in.
Yeah, on the extending your cash runway, this one's a fairly easy one to implement, but should be fairly far down on the list of extending your cash runway out.
Yeah.
And I'm just saying that, like,
Yes.
normally we say, like, go through the easy ones first, which is like check your subscriptions, extend out vendor payments out. This one's a really easy one of I just go check the box inside of my payroll provider. But at the same time, the risk on it is enough. It should be fairly far down the list that you've exercised other options before you exercise this one.
And depending on what provider you use, if you rely on their payroll sync into your accounting software to record your liabilities and your expenses and your cash withdrawals, you want to make sure that it still records this liability correctly.
Yes.
And make sure it accumulates it, because you will owe it. You want it to accumulate on the balance sheet to be glaringly clear that you owe something to the IRS. So I think this has been a great update in regards to that. And I think we've scared the bejeebus out of enough people, clients and accounting firm owners, to make sure they do that right. Any other thoughts on this or the PPP loan impact that this deferred payroll tax would have?
I think the only thought for me with it is as people are starting to get their PPP money this week or next week, as they're kind of preparing for it, really make sure that you're planning for it correctly. I mean, make sure that money's set aside, make sure you have it organized, make sure that your ducks are in a row so you're not running into potential issues. This is one of those areas, if you're dealing with both of them or only utilizing one, that you need to make sure you have a proper understanding of each of the steps that are associated with it for you. This is one of those areas where being naive can really create major detriment for you as an organization. Whether you're an accountant, whether you're a small business owner, whether you're a large business owner, there's so much risk that's available, both in taking on debt and assuming that it's going to be forgiven, allocating or deferring payments to the future, but really just try to understand those pieces and really come to understanding of how you make sure that you take care of yourself, that process. Because if not, this stuff potentially falls into a place where it's not going to be forgiven, and then it becomes risky, and it becomes really, really nerve-wracking on how you try to circumvent later issues later on down the line.
It's a good word, guys. Hope everyone had a great Easter weekend, and I hope you have a great week. We will be providing more updates on a daily basis, and hopefully we'll all be funded just like Jacob and his clients have. So we will talk to you soon.